In little more than a decade, cryptocurrencies have evolved from an obscure experiment discussed by a small group of technology enthusiasts into a global phenomenon worth trillions of dollars. Supporters describe them as a revolution in finance, a technology capable of transforming how people store value, transfer money, and interact with the global economy. Critics, meanwhile, argue that cryptocurrencies are driven largely by speculation, extreme volatility, and promises that may never be fully realized. Yet despite years of headlines, market booms, dramatic crashes, and endless debate, many people still struggle to answer a simple question. What exactly is a cryptocurrency? At its most basic level, a cryptocurrency is a digital asset that uses cryptography and decentralized computer networks to record and verify transactions. Unlike traditional currencies, which are issued and controlled by governments and central banks, cryptocurrencies are typically managed by distributed networks of computers operating around the world. The idea behind this system is to create a form of money that can function without requiring a central authority to process or approve every transaction. To understand why this concept attracted so much attention, it helps to look at how traditional financial systems operate. When people send money through a bank, purchase goods with a credit card, or transfer funds internationally, trusted institutions act as intermediaries that verify and record those transactions. Most of the time, this system works extremely well, but it also means users must place trust in banks, payment providers, governments, and other centralized organizations. Cryptocurrency was created as an alternative approach, one in which trust is placed not in a single institution, but in mathematics, cryptography, and transparent computer protocols. The breakthrough came in 2008, when a mysterious figure or group using the name Satoshi Nakamoto published a document describing a new digital currency called Bitcoin. The following year, the Bitcoin network launched, introducing the world to a technology that would become known as blockchain. A blockchain is essentially a distributed ledger, a shared record of transactions maintained simultaneously by thousands of computers across a network. Because copies of the ledger exist in many locations, altering past transactions becomes extraordinarily difficult, making the system resistant to fraud and manipulation. This innovation solved a problem that had challenged computer scientists for decades: how to create digital money that could not be copied or spent twice without relying on a central authority. In Bitcoin's case, new coins are introduced through a process called mining, in which computers compete to solve complex mathematical problems and secure the network. Over time, Bitcoin grew from a niche experiment into the world's largest cryptocurrency, attracting investors, developers, businesses, and governments alike. However, Bitcoin was only the beginning, and thousands of other cryptocurrencies soon emerged with different goals and technical designs. One of the most influential projects was Ethereum, which expanded blockchain technology beyond simple payments and introduced programmable smart contracts. These smart contracts allow developers to create decentralized applications capable of operating without traditional intermediaries. As a result, entirely new sectors emerged, including decentralized finance, blockchain gaming, digital collectibles, and tokenized assets. Supporters believe these technologies could eventually reshape industries ranging from banking and insurance to supply chain management and digital identity. At the same time, the cryptocurrency industry has experienced periods of extraordinary speculation that have generated both enormous fortunes and devastating losses. Prices have often risen and fallen dramatically within short periods, creating opportunities for investors but also exposing significant risks. This volatility has led many critics to argue that cryptocurrencies function more as speculative assets than as practical forms of everyday money. Governments and regulators around the world have also struggled to determine how cryptocurrencies should be classified, taxed, and supervised. Some countries have embraced aspects of the technology, while others have imposed strict regulations or outright restrictions on its use. Environmental concerns have also played a role in public debates. particularly regarding energy-intensive mining systems used by some blockchain networks. In response, many newer projects have adopted alternative approaches designed to reduce energy consumption while maintaining security. Beyond investment and regulation, perhaps the most important question concerns long-term adoption and real-world usefulness. Will cryptocurrencies become a fundamental part of the global financial system, or will they remain a specialized technology used by a relatively small portion of the population? No one knows the answer with certainty, and opinions remain sharply divided even among experts. What cannot be denied is that cryptocurrency has introduced ideas that have already influenced discussions about money, ownership, privacy, and the future of finance. For the first time in history, individuals can transfer digital value across the world without necessarily relying on traditional financial institutions. Whether this represents the early stages of a financial revolution or merely a fascinating experiment remains one of the most important questions of our time. In future episodes, we will explore Bitcoin in greater depth, examine how blockchain technology actually works, investigate major market crashes, and analyze the rise of decentralized finance. We will also discuss stablecoins, regulation, digital currencies issued by governments, and the ongoing debate surrounding the future of cryptocurrency. Because cryptocurrency is about much more than digital coins and fluctuating prices. It is part of a larger story about trust, technology, money, and humanity's continuing search for new ways to exchange value in an increasingly digital world.